The Community Classic program allows for lower interest rates, straight up, just better interest rates. The catch, because there's always going to be a catch, is that it's going to be property specific. So the properties have to be, and what's known as, so in the mortgage world, AMI, average median income, meaning in this area, they're going to say, here's the median income. So for this community program, it's a way to helpfully encourage homeownership inside of these areas for a Community Reinvestment Act, the CR. If you're in the banking world, you've heard that a lot. But banks have these obligations based on the federal government that says you have to do these CRA products and programs. And so the ability that allows them to do things that they may not otherwise be allowed to do. So in this instance, it's offer lower than market interest rates. Now the catch is, again, it's got to be property specific. So these properties have to be in certain designated areas. And we can give you, somewhere, if you just Google, CRA properties or things like that, we'll put a link around here somewhere too. You can kind of look it up. It's not going to be exact. You're welcome to call the Mortgage Mark team. We will put in the address and tell you yes or no if you're looking at a home, but it's going to save you, I'm going to make this up, half a point, 3/4 of a point in interest rate. The catch is, again, you got to qualify not from the property itself, but also the area median income. You got to be at 80% or less of whatever that area median income is. So in the Dallas Fort Worth proper, in the middle of the city, that's going to be a different number than if you go to West Texas, middle of nowhere, and look to buy a home in Seminole, Texas, for example. So the two, because the average median income for those areas are going to be different, it's also you're going to have different qualifying limits for what you do. So you could make too much money and become ineligible for this program. But for those that qualify, literally, what a sweet deal. What a sweet program. It's conventional financing. All the other stuff is normal closing cost, normal seller concessions. It's a great product, great program. Highly recommend it. The Mortgage Mark team will obviously run not just this option, but all options and make sure we explore everything that's out there for you. Reach out to us. We're happy to answer any questions you might have. And as always, when you think mortgage, think Mark. Welcome to another Learning About Loans.
Howdy.
Miss Howdy, I love that. Howdy indeed. Miss Krystal Miles with the big howdy. So with a howdy day, what's our topic? What are we talking today on Learning About Loans?
We are going to talk about the Chase Community Classic loan, which is it's intended for kind of low income areas to incentivize home buyers to purchase in those areas. That way you can kind of get a mix of people, then it helps the economy in the area. And so I think they call it a Community Reinvestment Act program.
Okay. So Community Reinvestment Act, CRA, right? So for those that don't know, in the banking world, the federal government makes banks do things to try to improve communities. And that's the Community Reinvestment Acts. They allow them to make programs and all these other offerings to hopefully reinvest in the community and spur it, make it better. So um, so I heard the word Chase, right? So
Mhm.
that's where it's coming from. And people, do you have to go to Chase to do this? Like if can I get a mortgage with the Mortgage Mark team and with Krystal? Can I do that?
Yep, of
Okay.
course.
So it's offered by Chase
Yes,
because
they are
it's
investors.
part of the CRA, the Community Reinvestment Act. And what exactly is it for? So it helps people get in there, but what's that mean? What's that do? What's it offer them?
So this program is address specific, but it offers a much lower than market interest rate. And what I mean by that is like if the market interest rate was 7% today, this interest rate could be maybe 6.5 or 6.25%. So it offers a really low interest rate to incentivize people to buy in those areas by obviously lower their payment through the interest rate.
Interesting. So property specific means you have to put in 123 Main Street to determine if this program is even available. Is that what I heard?
Yes, that's
If it
correct. But
is,
there are a lot of areas though that do qualify this. I mean, I believe if the area median income is probably about 80,000 or below in that area, then this program should qualify for that.
how would somebody look that up? Somebody not in our mortgage world, how would somebody know either the area to be in, the area AMI is the mortgage term through that's the acronym, the median income, area median income. How can somebody look that up? I assume they could probably just Google it. Is that how do they know if they're in that area or looking in the right spots?
So Fannie Mae does actually have an area median income tool. So you can do it by address, you can do it by city, and it just kind of tells you what the area median income is in that area.
So
I
we
don't
will
know
put
for
a
sure
link
if this
somewhere.
program qualifies, we would have to enter the address, but that can help you kind of guide that a little bit.
So we will put somewhere in this link what Krystal just mentioned because I know she's shown it before in other videos. We will put a link somewhere where somebody can look it up, and I would venture to guess that's a good reference, but it's not the gospel. It's not. It doesn't mean it's like the end all be all. If it says it is, it may not. If it says it's not, it may be. But at least kind of shows you the let's call it a heat map, right? Where some of those areas might be, so that
Mhm.
you, a potential home buyer, could go find a home in that area. And then obviously, when working with a lender like yourself, Krystal, like what do they do if somebody calls you up and says, "Hey, I want to buy a home," and I heard, I saw you on the internet and you were talking about this amazing program. How do you like what can they do with you? Like what can you do as a lender to help them identify these areas?
Well, I can go to our pricing engine and kind of plug in some of the addresses, but through doing these programs, I know that there's a lot of areas like our market is the Dallas Fort Worth market. So, a lot of Irving, Farmers Branch, South Dallas, Mid Dallas, just, a lot of areas that are probably homes that are 400,000 or less. It's not going to be in your $1 million home neighborhood, obviously. So, but there are a lot of areas that qualify for that. Grand Prairie, Arlington, a lot of those areas do qualify for that program.
Yep, and that's the part I think is really important to stress as well is again, it's the reason why the obvious $1 million is because again, this program is only available to individuals that meet the income requirements that are at the 80% of the area median income. So in other words, in Dallas, if the area median income is X, you won't qualify for $1 million home on that income. So that's where those
Mhm.
income limitations do come in. Krystal, obviously, being very, very familiar with the Dallas Fort Worth area, I named a bunch of wonderful places. But even if it's somebody calls us and they want to do a loan in West Texas or Alaska, I don't care. You pick
Yeah,
wherever they want to
it's
go.
not Texas specific.
It's not Texas specific. They can help. And again, you can go in there. We can see from our side where things are, put in the address. It'll give us a yes or no. So as people go through this process of getting pre-approved with Krystal and going through this piece, they can say, I'm looking at 123 Main Street, and you can say yes or no. And it's not that we can't help them if they find one that's not eligible. It just means you don't get the benefit of this program, which is that artificially lower interest rate by, let's just use an example of a half point lower. Maybe it's 3/4. Again, can vary based on the market. So we're not quoting rates here to say here's what it is, but we are saying it's at least materially lower. So with this program, they call, they do the loan with you. Uh, Credit score, qualifying, DTI, like what do we need to know about DTI means debt to income ratio meaning purchasing power. What do we need to know for qualifying for this program?
So this is a conventional loan product. The minimum down payment requirement is 5%. And the debt to income ratio is like regular conventional loans that you can go up to as much as 50%, but that kind of depends on your overall credit profile. And that's why we say up to 50% because it might be restricted to lower if you don't really have a lot of established credit or something like that. But it's really a case by case basis. There's no one size fits all when it comes to debt to income ratios. It's really what our automated systems will say yes or no to.
That was about to ask the follow-up question, and you hit it. You already answered it. That last sentence, the automated underwriting system, we call it AUS, AUS. The automated system is given to us, provided to us as lenders from Fannie Mae and Freddie Mac, meaning it is their systems that say yes or no, their systems that determine how high that DTI goes. So you can't just call Krystal and say, "Hey, can I qualify this, this, and this?" We would need information, a full loan app to actually run that automated underwriting system to say yay or nay, to truly know whether they can do it. Just because the property's good doesn't mean the borrower's good. All right, so hearing all that, um, paperwork normal because it's conventional loan, conventional financing, normal stuff, whatever you're going to need, and we've done
Mhm.
plenty of videos on that. What about closing costs? Are there any extra? I mean, we're getting a better rate. Are there closing costs higher, lower, the same?
No, it'll be your typical closing cost, but it is restricted to your primary residence. So, A lot of these programs that have incentives like this, they are for primary residence. It's not meant for investments and second homes because it is to help people get their foot into the door.
Yep. You're getting the artificial lower rate. What about mortgage insurance? I assume there's mortgage insurance on this product and
Yes,
program.
there is mortgage insurance and it's just typical mortgage insurance based upon your down payment.
So they're not punishing anybody in any way. Because again, this is the part of the CRA program, Community Reinvestment Act. So they really are just coming in and saying, here's the lower rate to help folks that just may be on the cusp of qualifying to get into that home, right? To where it's
Yes,
like
and
that
it's
extra, that lower rate helps them qualify for the house.
yes, it is more based on the area. It's not actually based on income. There is no income restrictions. It's just based on the area median income of where the home is located.
You were right to say that, and you're right to correct me. I may have misspoke or at least misled by accidentally. The income restriction doesn't say here's we can't make more than this. But to Krystal's point, areas change, right? Whether it's Dallas, Fort Worth, North Texas versus middle of nowhere, Paco, Texas, right? You're going to have different area median incomes, and that is what's going to determine how much you can or can't exceed. It's not a number that's just picked out of the air. It is based on that area and what the incomes are. So I misspoke. You're right to say that. Um, so process is the same. Closing costs are normal. They're not charging you extra points or extra fees for anything of that nature. You get a better rate. Mortgage insurance is normal. Paperwork's normal.
It
Seller
can,
concessions, 5% down. How much seller concessions? Is it normal?
so with 5% down, you can get 3% seller concessions. 10% down, you can get 6. If you put over 25% down, you can get 9% in concessions. And if anybody ever got that, good for you.
True. Good for you. So again, it's normal, conventional, conforming type concessions coming from a seller.
Yes.
Um,
Now, I do want to mention
First,
that, sometimes we get hit with people trying to do short closings, but since this one does have to go through our underwriting and Chase's underwriting, we do ask for a little bit longer to close, 30, maybe 45 days. We can usually get them done in 30, but, we can't do like those expedited two weeks to 21-day closings with this product because it
I'm
does
gonna
have to go through two underwriters.
I forgot to hit on that, and that is so right. It is $200. So let me play devil's advocate. Well, why would I even call you, Krystal? If can I go straight to Chase to get this?
You could, but you might not get the customer service. They give you.
I do love it. I have my script. So what would you say? Script, guys, and I'm not implying it's a sleight of hand or we're trying to pull the wool over somebody's eyes. It's just making the point, which yes, customer service is one. Um, why else? In my opinion, like I have a strong one here for this, and you and I've dealt with this our whole career. Well, if it's Chase, I'll go straight to Chase to get it. And I do think customer service is one. The other part you could say, well, hold on, I got to go through two underwriters with you guys versus one at Chase. What do you say to that?
I mean, it might still take just as long because they are a bank where we are a mortgage company. That is all we do all day long. And we have the most experience with that where, Chase is a bank. They're really good at banking. But the mortgage process just may not be as streamlined and as smooth as working with us because that's what we do every day. That's what our processes are made to do.
And just to be very clear, I'm putting Krystal on the spot and she's handling it beautifully because the last thing we want to do is go on record on the internet and say like, what's going to really happen. But she's saying it very eloquently, and I will echo that, which is yes. Could somebody go directly to Chase and get this program? Absolutely. The question then somebody might ask is, okay, I'll ask it to you, Krystal, is what about the interest rate? Would I get a better interest rate or lower closing costs if I went straight to Chase?
No, because actually we get our interest rates from them.
Right. So in most cases, and again, guys, that we can't predict the future and we can't determine what Chase does or doesn't do and how this plays out. But here's my generic answer for all those questions. And again, Krystal answered it so well. I'll say it a different way just to drive home a point without saying what I really want to say on record. The reality is this is what we do. We're very good at what we do. We perform at a very high level. Not to say that there aren't wonderful people that work at Chase or Bank America or any big bank, but the reality is the big banks have to employ, I don't even know, 50,000 people. 30,000 people, it's really hard. I mean, great people they're not just abundant, everywhere that you look. And the mortgage market team, people have people like Krystal who are just incredible professionals who know what we're doing. And that ultimately makes or breaks the experience, makes or break whether the loan closes on time, closes at all. It makes sure that approvals are accurate and there is no price difference. It might be a couple $100, right? So maybe Chase runs a special that they're $200 lower in fees than us because their fees are going to be $200 lower. That or maybe they're $200 higher. Rate wise, to Krystal's point, we're getting a trade from Chase, and again, they need these loans, so they need us, people like us, not just the mortgage market team, but they need companies like us to give them this volume, to give them this business, because they by themselves can't fulfill, most often, probably can't fulfill the CRA requirements. That's why they offer it to third parties like us as a mortgage company to help them get enough loans for the Community Reinvestment Act. So again, they're trying to say, help us meet our banking quota. So in a weird way, we're kind of helping our competition, but we're happy to do it because it's really helping out wonderful people that are in a great community that they're trying to put the Reinvestment Act in. So yes, full disclosure, you can go straight to Chase. I would just challenge you, add another phone call and make two, Chase and us. I have a feeling you will make a good decision based on those two conversations. Whatever your gut tells you, whatever your experience level is from a customer service standpoint, I would trust that person that you feel the most comfortable with. So
I'm
well
actually
done
closing
answering your.
one right now that is a client of Chase, and he talked to them and talked to us and ultimately went with us.
We will go. I will gladly go toe to toe with any of the big banks. That again, for the reasons we just kind of mentioned, and we're trying to say it nicely, not trying to be very clear, but it happens so often that we are often not the first phone call. We don't like that. I'd prefer if we were. But the reality is the amount of times we not just big banks, but other mortgage companies too. So I agree with you. It was a very delicate topic. You answered it like a pro. Beyond that, Krystal, I can't, anything else that you can think of that we need to hit on for this program?
No, it's just another tool that we can offer our borrowers that are first-time home buyers trying to get their foot in the door. Maybe not a lot of money, or they're tight on the payment the payment threshold that they're comfortable with. And so we just are happy to have these tools to offer people to get them into their first home.
Yep. And so let's say somebody calls, not the mortgage mark team. We'll pick somebody in New York. That's the only state we're not going to touch because New York's just somewhere I don't ever want to actually do a loan just because the mortgage laws, they don't allow it with a vanity URL like mortgage mark. So that's the one state I would say, feel free. If you want to call somebody not mortgage mark team, feel free if you're buying in New York. What is the New York, if somebody calls a loan officer and a lender in New York, whether it's our company or any other, what do they need to ask for to ask about this program? Like, do they just say, "Hey, I want that program with Chase"? What words do they need to say if they can't remember the exact? Well, first of all, the exact name, because I don't know if that's a CMG thing or a Chase thing or an industry. Like, what's the name
Pretty
of
sure
it?
that's their program name. It's called Chase Community Classic.
So,
And it's just a property specific program that offers low interest rates.
that's what I would say, guys. Is, hey, guy, Mr. Banker, Mr. Lender, Miss Banker, Miss Lender, I'm looking to buy in said place. Are there any programs that are part of the community? And I would just use the CRA, the Community Reinvestment Act, perhaps maybe offered by Chase or any other banker institution. Because, guys, we do have, I know Krystal and I just did another video about a credit union that we're exclusive in that instance. So it's not like this program where their lenders have it, but that there are many relationships that banks will have with outside lenders. So just ask them directly, are there any programs? Our job, and Krystal's great at this, is making sure we explore all options, right? Our job is to make sure we do this. But if you get somebody that's just not quite the career professional that's been in the business for 15 years or whatever it's been for Krystal, you get somebody that's only been in there a year who doesn't know that, help them out by saying those words and call the mortgage marketing. That's the selfless, shameless plug. But Krystal, you nailed it. I appreciate you. It's a fantastic product. Thank you for, as always, joining me today. And you're amazing and incredible. And thank you for doing
You're
another
welcome.
edition of Learning About Loans.